Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 22nd of May, 2021. And we are producing our weekly update later this evening. But meanwhile, we're looking at the US economy and asking, is it on the road to recovery and what this could mean for precious metal prices? Now, this video is more or less identical to the one we produced yesterday, entitled Walmart Sales Up, but is the US economy really recovering? But due to YouTube's algorithm and the time that we actually processed this video, the number of views were pitifully small. And so we're repeating this video again with a new title and launching it at a different time of day. So if you've listened to the Walmart Sales Up, but is the US economy really recovering? But then by all means, unless you wish to listen to it again, skip this video. If you haven't listened to that one, then please certainly listen to this one. So let's take a look. Now, firstly, just a brief reminder of a video we published earlier today entitled Big Tech, China, Low Corporate Taxes Dominates, but for how long? And 3 videos we produced earlier in the week. Gold and silver price optimism at last. Gold and silver prices begin to surge. Will it continue? And 7 reasons why gold prices could surge and soon. And we've listed these in the description box below for ease of access. Now, we saw an interesting article published by BBC News 2 days ago concerning Walmart and its optimism for US growth. It's entitled, Walmart, Customers Want to Get Out and Shop, Says Boss. We'll just read an excerpt to you. Quote, US customers clearly want to get out and shop. The boss of Walmart has said after the world's biggest retailer reported stronger sales than expected. Walmart chief executive Doug McMillon said optimism had grown since the start of the year, and the retail giant raised its full-year profit forecast. Spending had been boosted by stimulus checks the government sent to most Americans, Walmart said. US like-for-like sales in the February to April period rose 6% from a year ago. Sales across the whole group rose by 2.75% to $138.3 billion, beating analysts' expectations. This was a strong quarter, said Mr. McMillon. Every segment performed well, and we're encouraged by traffic and grocery market share trends. We anticipate continued pent-up demand throughout 2021, he added. The Arkansas-based retailer said people were spending more after many received additional $1,400 stimulus checks as part of a US coronavirus recovery package approved in early March. Sales of non-food items such as clothes, electronics and toys jumped by 20% as a result. In a call with analysts, the firm's chief financial officer said that consumers had also started buying more beauty products as lockdown restrictions ease. Teeth whiteners in particular have done well, he said. Uncertainty ahead. Walmart raised its profit forecast for the current financial year, predicting an increase by high single digits rather than a small decline. But Mr. McMillon added, stimulus in the US had an impact, and the second half has more uncertainty than a typical year. Profits in the first quarter fell by 32% to $2.7 billion, after Walmart saw losses on the sale of Asda in the United Kingdom, as well as businesses in Japan and Argentina. Online sales also lost some momentum in the 3 months to April, rising 37%. In comparison with a surge of 74% the year before. The firm reported that customer traffic increased in April for the first time in a year, suggesting that vaccinated shoppers may have more confidence to venture out to bricks and mortar stores. Walmart is still spending heavily to grow its online business, such as offering next-day delivery or virtual clothes try-on services, so it can compete with other online firms such as Amazon. Despite continuing global macroeconomic uncertainty, this is a reflection of its exceptional execution as it can continue to shift on the fly as necessary, said Moody's Vice President Charlie O'Shea. Unquote. Now this is an interesting perspective when we balance this against US economic data published already this week. For example, we saw on Monday that the Empire State Manufacturing Index fell in May from 26.3 in April to 24.3. Housing starts announced Tuesday were down in April compared with March, from 1.73 million to 1.57 million. The Philadelphia Fed Manufacturing Index for May was down from 50.2 in April to 31.5. And this morning, market manufacturing flash PMIs for May remained unchanged compared with April, but the services PMI fell from 64.7 to 64.3. On the positive front, however, initial jobless claims fell from 478,000 to 444,000. Now, next Friday, there is a considerable amount of economic data being published in the United States, including consumer spending, and we shall see the level at which Walmart's experience is typified elsewhere. For us, what is clear from this report is that stimulus checks have clearly added positively to retailing. And of course, as lockdown restrictions ease, people will be back out spending again. However, our concern, and this was mentioned in the video we produced earlier today, unless the level of unemployment improves and considerably, when the stimulus checks permanently stop, because we're not sure if they have, we believe they have, but we're not sure, apart from basics and staples, it's difficult to see where any rise in retail will come from, because people without jobs do not have the money to spend. Now, of course, figures will improve compared to this time last year when the pandemic struck hard and lockdowns began. But the acid test will be comparing figures pre-COVID to those post-COVID. And over the coming weeks, we shall get a very clear outline of where both the US and global economies stand on this. We saw last Friday, for example, retail sales for April stood at 0% growth compared with 10.7% in March, and a negative 0.8% when automobiles were excluded compared with a positive 9% the month before. Industrial production for April was also down, and so too was the Consumer Sentiment Index. Now, all of these indicators are not totally prophetic or determinable in their conclusions moving forward. However, one has to ask, with inflation rising and the core CPI rising to 0.9% in April, compared with 0.3% in March, the pressure on interest rates, if this trend continues, may prove unbearable to handle. The Fed may very well maintain downward pressure on the Fed funds rate, but market interest rates may indeed rise nevertheless. One does not have to go far to see the dollar index has also fallen against a basket of other currencies. Today the index is down 0.1 and stands at 89.7, a far cry from 99.9 just around a year ago. Gold this morning is up $6 at $1,878, some $153 higher than 12 months ago, producing a return of just under 9%. And silver stands at $27.82, up just 1 cent so far today, but $10 higher than 12 months ago, providing a return of 64%. If more stimulus is issued, this will serve to weaken the dollar further over time, but admittedly strengthen retail sales short term, until, as already stated, it stops. Any climb out of recession would prove positive for silver because of its industrial demand component, but one cannot help but wonder at which point this economic positivism will stop, if it hasn't done so already. As the head of Walmart stated in the article mentioned earlier, quote, "Stimulus in the US had an impact, and the second half has more uncertainty than a typical year," unquote. We tend to agree with him. But what do you think? Where do you see the US economy heading over the next 6 to 12 months, and then 2 or 3 years beyond that? Do share your thoughts. Meanwhile, thank you so much for listening. If you haven't already done so, please do subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And a gentle reminder of the videos we've produced earlier this week. We've placed links to them in the description box below. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.